Well, hello, everybody, and welcome to another Southern California housing market update. I'm your host, Stephen Meade with Domicile real estate for people who love houses. Welcome back. It is the end of September, September 26th, and this is our regular full market housing update. We also do one that's specifically geared towards the entry level end of the market. And, I had a client ask me an interesting question, and they asked, is the market stuck, right? And it got me to thinking, what does stuck actually mean? And I started thinking about kind of the market that we've been in, at least for the last year or so, right? People expected housing prices to fall. They haven't really, not in the magnitude, or I think, or in any direction people thought they were going. They've kind of just held steady. And we've really seen a lot of waffling of the market, particularly in the last 4 months or so. And so I wanted to kind of take a look at the stats this week, kind of through that lens of stuck. And then at the end, we're going to talk about, do we think it's stuck and what might actually change that, right? What might change kind of the market if it is in fact stuck? So let's go ahead and get started. We've kind of got some interesting things to talk about that I noticed this week. So we're going to go through those. And let's bring this up. So first thing is active listings. Under $1 million, we're holding steady on that. But we're actually rising just a little bit and ever so slightly kind of on the $1 to $2 million homes. And that's interesting because that is not kind of where we were at last year. Last year, we were steady and starting to drop. I'm not sure we're seeing that drop kind of perspective. One of the things that's happened in the last couple of months is we've really seen how this under $1 million market has reacted very differently than that $1 to $2 million market. And I think it's because they are really pulling from very different buyer pools and different seller pools, and that is creating different dynamics. So if we look here at our listings in the last 14 days, on our under 1 million, we've seen them rebound a little bit, but frankly, these numbers were pretty low 2 weeks ago, basically as low as they were back in February. So people kind of held off on listing and then they kind of bumped back. This is not super unusual. I've talked about this kind of end of summer vacation / back to school slump that we see very commonly in Southern California. I think that's true. So we're seeing a little bit of a bounce back. The question is this a trend going up, or are we going to just kind of be in the zone here, kind of this 1,800 houses under $1 million every 2 weeks or not? If you look back a year ago, we were kind of on that downswing last year, and it doesn't really look like we're on that downswing. In the 1 to 2 million, we actually see a pretty healthy number, at least healthy by the standards of this year, right? Kind of homes are coming on the market at the same rate. And, one of the theories on this is that most of the home sellers that are out there today, most of these home sellers are not, how do I want to say, optional home sellers, right? They're not voluntary home sellers. They're people where someone is going to assisted living, someone has passed away, they are moving for a job, divorces. These kind of compulsory moves are what we're seeing a lot of, especially in that $1 to $2 million category. And I think that's the reason why that number seems to be a lot steadier in terms of the listings coming up, and it just hasn't really changed as much as you might expect. Let's see, I'm not sure. Let me resume our share here. Let me see if I can get those stats back. For some reason, it doesn't want to go here, but let me try it again and see if we can't get these. Let's see here. It says it is paused. Resume share. All righty. We're going to try this once again. I normally don't have technical difficulties on this stuff, but we are going to see what we can do here. And if not, I can manually reload it here. Let me try this one more time on this and see what we can do. Okay. Now I think I got it. Let's give it one more time to bring those slides back. Most of you know I actually do record these live. So, when we have these kind of technical difficulties like this, it really is live. So if we look at our new escrows, right, if this is the supply side of the equation of the supply and demand, this is the demand, right? And what we see is rising demand here for homes under $1 million. We saw them take a dip and really kind of bounce back here. I'm curious if we're going to see this. I mean, this is such a rapid rise. Is this going to continue onward and upward? Anecdotally, it sure seems like it. 1 to 2 million, again, we're just kind of even. We're just kind of playing in the same range. We look at our absorption rate. That again kind of tells two stories. We're seeing that absorption rate rising back up, over 80% here for under 1 million, and it has dropped below 70% from 1 to 2 million. What does this mean, right? If you're a buyer or seller? Well, if you're a seller between $1 to $2 million, it means you need to have a compelling house to sell. You need something that is going to make buyers take notice. If you are a buyer in that range, congratulations, you actually have a pretty decent selection depending on area. And you've got a little bit more market power than you previously did. If you're under $1 million, that market is tightening. Now, if we look at our closed prices, this might explain a little bit about why we're seeing demand soften, right, as things get absorbed. Look at how these prices have kind of jumped here in the 75th percentile, right? These are those homes kind of heading towards $1.5 million. Our median home price is pretty much flat, trading in this range. And then we've seen some rises at the bottom end, though this past 2 weeks, maybe a slight decline. Again, this data is a little old, so you have to remember, that this data is basically based on the deals that happened 4 to 6 weeks ago because it's based on closed prices. Now, if we look at percent still active, this again tells kind of a diverging story. Under $1 million, that still active percent is dropping. That indicates a tightening market, right, under $1 million. If we look at our $1 to $2 million, that market is continuing to get a little bit softer, a little bit easier. As soft as it was last year? No, but definitely moving in a positive direction if you are a buyer in that market. If we look at our close to list ratio, again, we see a diverging market. Look at this. Our under 1 million are almost at 102.5% of list price. That means on average, homes are selling for a bit above list price, whereas our 1 to 2 million, look at this number kind of creeping back towards 100%, meaning on average, selling right at list price, which I think is pretty interesting. If we look at our days on market for new contracts, again, we are seeing that diverging story between under $1 million and $1 to $2 million. If you're a seller and you have a home that's worth just into the 1 million, my advice, price it at $999. That will get you a lot more eyeballs on it. But look at this, days on market dropped for under $1 million. And by the way, these are homes that went under contract in the last week. So this is more recent data. Days on market for 1 to 2 million, that went up. Now, admittedly, are these that far apart from each other? No, but it's interesting to look at the differing direction that they are going. Now, if we look at our three-way chart, right? This is one of my favorites here. We see that we've got a little bit of an easing here on that payment level. It's kind of sticking around there. Our rents bounced back down. So the question is, was that a blip? Kind of an end of summer rental index blip? We've seen a couple of those in the past. Or is that going to kind of be treading in this zone here? We're going to have to wait 2 weeks to find that out. Inflation, of course, here on the bottom line, creeping up very steadily and slowly. And then finally, we have kind of our prevailing interest rates. We are, of course, firmly across that 7% threshold. Let's talk a second about interest rates as part of this stuck versus unstuck conversation. There are a lot of things that kind of contribute to this market being sticky and stuck together. Here's some things that it would take to really kind of upset that balance. I think you'd have to see a big difference in interest rates, right? And by stuck, what do I mean? Stuck doesn't necessarily mean that the prices are stuck. What it really means is that the volume of transactions is not very high right now. So there's not a lot of speed in the marketplace. And let me give you an example of some raw numbers, right? In 2021, for example, in California, we were over 400,000 homes sold for the year of 2021. For 2023, we are on pace to hit about 280,000 homes sold. I mean, that is a huge, huge drop. So, I am definitely in the camp. I would call this a stuck market, right? Stuck means people are afraid to make decisions. They're afraid to do anything. Buyers are worried about, am I paying too high of an interest rate? Is the market going to fall? I think that's still a concern, or there's nothing available for me, or I can't afford anything. These are the buyer concerns. Sellers are saying, well, if I sell, where am I going to go? And I can't even afford to buy the house I have because I can't get the same interest rate on it as I have now. So, what we're going to have to see is a couple things are going to have to happen to make a market unstuck. Number one, right now the average mortgage rate, in the marketplace is below 4%, right? Mortgage rates are going to have to come down to be closer. That encourages those move up buyers. That means the price differential is smaller for them to move up and buy another or a different house if they need a different configuration due to changing needs. I actually do think we're going to have some pent up demand, right? People that were planning on making a move and have been holding off. I think there's going to be a threshold where a bunch of those would-be movers, buyers and sellers, come back to the market. Unfortunately, that doesn't really solve that might unstick our market, but that doesn't really solve a lot of the affordability problem because we are adding buyers and sellers at roughly the same pace. There is a net zero. It cancels it out when we're talking about demand. The other thing that I think might need to happen is if there is some sort of an other kind of inventory event that could happen in the marketplace. That would be something like institutional investors selling in mass. Unfortunately, I don't think any of those is terribly likely. So if you are a buyer waiting on the marketplace, I don't think Blackstone is going to suddenly unload their investment portfolio of single family homes. I just don't see them doing it that quickly. Even if they did, they would do it over like a 10-year period of time. I think the net effect would be negligible. Anyhow, that's all I've got for you. Happy Tuesday, everybody. I hope you're enjoying kind of a little bit of our Indian summer we've got going on right now. It is kind of a nice warm September that we're experiencing. I know we had some chilly weather, but now it's, these are my favorite days, right? The tourists are gone, weather's nice, enjoy the Southern California lifestyle. It's what we're paying for. Don't forget to like, subscribe, and hit that notification bell. If you or someone you know is looking to buy or sell real estate in Southern California, we would absolutely love to chat so we can lend them our expertise and strategy. Let's see, don't forget to like, subscribe, and hit that notification bell, and we will see you again real soon.